Hi, this is Brian, Director of Portfolio Management with the Retirement Network, where we try to reach client goals with the least amount of risk possible. Today's video is going to be on a type of risk that we all deal with on a daily basis, and one that is in direct conflict with our number one investing principle at the Retirement Network, and that risk is headline risk. And we're going to talk about what it is, we're going to try to talk a little bit about how it works, and then more importantly, we're going to spend more time on how to deal with it. So, what is headline risk? Headline risk is simply the risk that we may react to some kind of news that's out in the news cycle. And this is the opposite of following a plan, by the way. It's an emotional reaction to some kind of news out there that gets us to sell in fear or to be greedy and buy something that maybe is not appropriate for our portfolio and so on. So how does this work? And why are the news agencies getting us to read these headlines on this emotionally based level? Well, first of all, we have many news agencies now. We don't have just the traditional at-home TV news agencies with the internet. We have a lot of different avenues now. We have blogs, newsletters, videos like this one, and we still have the standard news agencies out there and more. So these news agencies, they are incentivized by activity, by the number of views they have on a video, by the number of clicks they have, by the number of openings they have on an article. They're motivated to get you to watch their videos or to read their articles and so on, which makes sense. Because they're based on viewership, the easiest way to get viewership is to stir up emotions. And the easiest emotions, of course, to stir up are fear and greed. So how do we deal with, now that we know this, how do we deal with this? Well, the number one thing to understand is that markets ultimately run on fundamental data, on the economic data. They're not running on short-term news speculation so much. There is some noise that comes from this, but it's noise. Second thing is to keep the long-term perspective when investing. That long-term perspective by nature filters out some of this short-term noise where you don't even pay attention to it that much anymore, and you start to see what's more important to pay attention to. In other words, stick to the plan that you have. And number three, and this is probably the biggest one to know, number three is know that the largest obstacle to successful investing is poor investor behavior. Now that you know that these news agencies are incentivized to create poor investor behavior, you're now armed with the knowledge that, hey, I'm not going to react to that type of incentivized, emotionally stirring up news articles. Okay, don't fall in a trap is the bottom line. That's all for today. Please tune in to our next video. And remember, at the Retirement Network, we try to reach client goals with the least amount of risk possible. See you next time.